Well, Shelley, here we are. Time for another segment. We get back into the world of insurance acronyms again. So you've thrown a lot out at me, but in this segment, I thought we could talk about OCIP versus CIP versus a few other things. But maybe we could start off by talking about a term I've heard of over the years and don't know a thing about. What's the term RAP mean?
Okay, so RAP is just a kind of an all-inclusive slang for all the CIPs, which just stands for Controlled Insurance Program. And there's a million of them, or not a million, but there's a lot of different ones and different variations, but let's stick to the main ones, which is the OCIP and the CIP.
And the O is?
Owner, and C is contractor.
Okay.
So it's just who buys it. So if the owner is going to buy it's an owner-controlled insurance program, which is the best way to go because it's their interest, their financial interest. That makes them the first named insured on the policy and in control of the project, which is most appropriate when you think about it. It's their financial loss if something happens. So they really should be in that position. And that's just an opinion.
Now, is OCIP, CIP, are these for certain types of projects? Are these if I'm building a custom home? That's all?
No, that would be too small for. Well, I mean, you could do it, but it wouldn't be cost effective because they have huge minimum premiums. So you need to be in. So they're done on a project specific basis, except for rolling RAPs or OCIPs that we do like on a production builder, where it's the same concept, but it's on all of their projects rolling.
So it could be residential.
Yes.
But is more the norm a multifamily build?
Yeah, it's usually condos.
Okay.
I mean, for the most part, because they don't fit into the traditional insurance product, and if you have somebody that's, all the rest of their business is fairly innocuous and like, kind, and quality, and then you want to throw a condo in there, you're going to end up paying condo rate for all the rest of your work, because you generally have one rate. So now you want to isolate that in order to keep the cost down, not impact that with losses, because if you had a loss on that, you added it to your traditional program, because sometimes they're even small. If you have a fairly small condo, you could have a little condo project and maybe it would fit into your traditional program, but if there was a loss, it would hurt your loss ratio for 5 years going forward on that, where if you isolate it, it's just over here on its own.
That makes sense.
So it's a way to isolate it. So it's controlled insurance program, and it's either bought by the owner or the contractor, OCIP.
Okay. So that covers our question about the difference of those. Okay.
Yeah. And then from there, what it does is it's a united front where the owner, the general contractor, and the enrolled subcontractors are all protected under one policy.
Really?
Against that third party that's going to sue them.
Huh.
What it doesn't do, and this is part of what people don't understand about it, is it doesn't cover the conflicts between the two. So the owner and the general contractor. It's only protecting them united front against other people. Oh. So if they have a squabble between them, they have to deal with it on their own.
Okay.
So if the employee is injured in an action over claim, it's going to defend both of them against that claimant. Or say it's a class action lawsuit because there's water damage and all the unit owners are coming back at them. At the end of the day, the idea is it's one place, one recovery for those unit owners and the attorneys and everybody to come after in a united front.
One carrier.
Is
responsible for it all.
Right. Okay. So where a lot of these programs fall down, though, and I see a lot of, is that the owner buys, maybe $1 million occurrence, 2 million aggregate policy like you would generally buy just as on your own. And that's not enough.
Not small.
To cover the owner, the general contractor, and an average of 35 to 45 subcontractors that might all be named in this lawsuit. Yeah. So as a subcontractor, if you're being asked to enroll in an OCIP, you must find out and get a packet from them to find out what limits and coverages that are going to be provided under that. And if you can opt out, I often have my contractors opt out because I've sold them more limits or better coverage than what's being offered under that program. But that's something that that would be worked out individually. But it's something to think about. You don't always have to. Some of the OCIP programs will require that just absolutely has to enroll, period. Mm-hmm. Any tangible work subcontractor has to enroll. So now they're all enrolled. But the trick here is that those subcontractors still have to provide a certificate of insurance
Still
to
gotta
enroll
indemnify, right?
because there's a trick in here. So that because they have to provide their off-site coverage, they still have to provide their auto coverage because that's not included in there, and they still have to provide the stopgap because that's not included in there because that's their own risk of their own employees. And that's kind of where the rub starts coming in. So they're not foolproof. Everybody's like, oh, it's the end all. Well, there's risk there too. Neither way, the traditional way. So in comparison to the CIP and why they're so expensive, whoa, why is this so expensive? I'm like, well, you're providing everyone's insurance, right? So if you were to add up that project and everybody's insurance is based upon production estimates, right? So everybody's payrolls and costs all the way down and charge their individual rates on every single policy, added that all together. That's basically what we're doing here is we're providing insurance for everyone. So most of the insurance companies for the subcontractors, they don't really like them participating in CIPs because now they'll have an exclusion. If you participate in a CIP, we're not covering it. But again, you get in front of a judge and a jury in the consumer protection friendly state, and they just say, well, we don't really care. Yeah. There's no one left standing but you, so pay the man. We don't care, right? So in general, if a subcontractor does a lot of that kind of work, then they're going to end up, they might be as innocuous as a interior painting or something, right? And if they're doing all their work in CIPs, except for just 20% just regular work and 80% in CIPs, they're going to end up in a surplus lines carrier because no admitted company is going to want to participate in that and defend their exclusion when they get named because they're going to get named.
It just kind of automatically happens.
Yeah, because the attorneys will go and look on the labor and industries and get a list of every single carrier, despite it being a CIP, and name them all anyway because they're still, then those carriers, I call it the low-hanging fruit. And if you imagine that everybody knows somebody thing, right? So everybody all the way down, and then they go to the low-hanging fruit that, the street and paver guys and the, landscapers and whatever, that literally don't have anything to do with it in order to get those carriers off of it and get the reserves closed and the claims closed. Because once a claim is opened, it's open until it's closed. Somehow they pay $5,000 each to get released, right? And then as you get higher, it's 10 or 15, right? Until you get to the core guys up here. Wow. All that money that they've gotten from the lower tier ones funds the suit so that the developer or, the different people don't have to pay any money on it.
Wow.
Yeah, it's a money game. It's all a money game.
Yeah. I've heard of project-specific policies. Yeah. How is that different than what we're talking about?
Basically the same exact thing because it's a one-time policy. All of the CIPs are a one-time policy, and then it covers you through the construction period, and it automatically builds in the 6-year tail for the statutes or whatever the state you're in, the statutes that apply. So it covers everything. So you never have to worry about having that occurrence problem that we talked about in an earlier segment where you have to keep renewing each year to keep your coverage for an occurrence that happens later. It's just built in one time for everybody. Okay. So a project-specific policy does the same thing. It just doesn't include the subs in the coverage. So it's just the owner and the general contractor.
Okay.
But then you have to worry about whether the subs have exclusions. And so there's really no easy way to do it because either way, you have to worry about if your subs have exclusions, because if they have exclusions and can't pay, now it's going to hurt you.
Yeah.
And on the other hand, the subs that participate, it's not necessarily bad for the general contractor and owner, which is their advantage of doing it this way. And most of them try to charge the insurance back because they're providing insurance for the subs. So then the subs want to go to their carriers and say, hey, they provided me insurance over here. I don't want to pay for it over here too. Yeah. They tell them that, then they go, ooh, we don't want to insure you anymore because you're participating in these programs. Right? So it's a catch-22. And it's sort of...
So this brings me to the question, what dictates choosing one of these paths over the other?
Size of the project, anything usually over 3 stories, you start getting more hazardous as you go up. Okay. Everything gets worse and worse. Got a leak up here, goes all the way down through everything.
That's true.
Yeah.
That's true. Trade contractors come in all different sizes and shapes. Mm-hmm. Is there a way for the quote unquote small guy, small gal to have a win, participate in these types of projects with these types of insurance requirements? Or is it something you'd say if me and my son have a company, you'd say, stay away from that? Or
yeah, I mean, what I've had some of my clients do is start a separate entity so that we just buy them a crappy surplus lines policy that's just good enough to get by.
because they're kind of tied into the big policy anyway, and then
Yeah,
it's going to
so
be what
they're
it's going to be.
Right. And so we're not paying a fortune, and it's not impacting the regular policies rates by,
Your experience rating on 95% of your business the rest of
Right.
the year or something.
right.
Okay.
And then I have some that just, that's all they do. So we just buy them,
Do what you do.
basically. But they still have to have, they can't use, if they don't have their own general liability policy, then they can't be registered as a contractor. They have to have their own general liability. So they still have to have their own. And again, they still have to have their own contractual liability, stopgap, and auto that they'll have to. But they can do that usually, because who cares if they have a condo exclusion or a tract home exclusion or any of those things that we're concerned about, because they're going to be having the coverage for that united front of that project and work under the wrap.
Okay.
It's confusing, I know.
But what a very interesting topic. Thank you.
It's a whiteboard, connect the dots thing to make sure everybody's got their coverage.
Why do I have a feeling you might draw that up and have it be part of our finished video
Just
here?
might.
Okay. Thanks again. That was great.
You bet.